All right, welcome back. Today, we're diving into the world of Warren Buffett and Berkshire Hathaway.
Right.
We've got this awesome article from The Motley Fool, and it really digs into how they're absolutely crushing it in the insurance game.
Yeah.
Especially with this turnaround story at GEICO.
Mm-hmm.
What I find super intriguing is this isn't just about numbers.
Right.
It's about how they find and cultivate amazing leaders.
Mm-hmm.
That's what we're going to unpack today.
Right.
The secrets behind their lasting success.
Yeah, that's a great point.
Mhm.
Because their track record is almost unbelievable.
Right.
They've achieved nearly a 20% average annual return for over 6 decades.
Yeah.
Imagine putting $100 into Berkshire Hathaway in 1965. Today, you'd be looking at a cool $5.5 million.
Whoa.
It really highlights the power of making smart, long-term investments.
It's mind-blowing, right?
It is.
And they're still going strong in 2024 alone.
Mm-hmm.
They pulled in a massive $47 billion in operating earnings. But what's interesting is where a big chunk of that comes from. Insurance, of all things. I wouldn't have guessed that.
Yes, and specifically, property and casualty insurance,
Yeah, okay.
what they call P&C.
Right.
It's a core part of their strategy, and for good reason.
Mm-hmm.
In 2024, their P&C operations generated $9 billion in underwriting profits,
Ooh.
and another $13.7 billion in investment income from those premiums.
Wait, so almost half of their operating income comes from insurance?
Uh-huh.
That's huge. I'm curious,
Yeah.
how does that even work?
That's where things get really fascinating.
Yeah.
You see, insurance companies collect premiums up front,
Mm-hmm.
but don't have to pay out claims immediately.
Right.
This creates a pool of money known as float,
Right.
which Berkshire Hathaway can invest.
Okay.
In times of high interest rates like we've seen recently,
Yeah.
that float becomes incredibly valuable.
Right.
It's like having a giant low-cost line of credit
Oh, wow.
that they can use to generate even more returns.
Okay, that makes sense.
Mm-hmm.
So let's talk about this GEICO turnaround.
Right.
Everyone knows GEICO, sure.
Oh, yeah.
They're like the third biggest auto insurer in the U.S.
Absolutely.
But they were facing some stiff competition.
Yeah.
Especially from Progressive.
Exactly.
Mm-hmm.
One key indicator of their struggles
Okay.
was their loss ratio,
Mm-hmm.
which basically measures how much they pay out in claims
Right.
compared to the premiums they collect.
Makes sense.
Progressive was consistently outperforming them on this metric,
Oh.
which meant trouble for GEICO.
And I've heard that Progressive was using technology to their advantage,
Mm-hmm.
specifically something called telematics.
Yeah.
Isn't that where they track your driving habits to set rates?
You got it.
Oh, wow.
Telematics is all about using data to assess risk more accurately.
Okay.
It's a game changer for insurance
Right.
because it allows companies to tailor policies and prices
Mm-hmm.
to individual drivers
Yeah.
based on things like their driving style, mileage, and even location.
Wow.
Progressive was early to adopt this technology,
Uh-huh.
and it gave them a real edge
Okay.
in attracting safer drivers
Mm-hmm.
and managing their loss ratio.
So how did GEICO catch up?
Right.
That's where Todd Combs comes in, right?
right. And he's a fascinating figure in this story.
Okay.
Before joining Berkshire Hathaway,
Mm-hmm.
Combs actually worked at Progressive as a pricing analyst.
Wow.
So he had firsthand knowledge of their successful approach.
Oh, wow.
He then went on to run his own hedge fund,
Okay.
which is where Buffett spotted his talent and brought him on board in 2010.
So he had this perfect blend of experience,
Right.
understanding insurance,
Mm.
and being a sharp investor. But wait, how did he actually turn GEICO around? Was it just about telematics?
Well, that was a big part of it.
Okay.
When Combs became CEO of GEICO in 2020,
Hmm.
he knew he had to modernize their operations.
Right.
He focused on implementing telematics.
Yep.
This is like Progressive.
Right.
But he also revamped their underwriting models,
God.
using data analytics to improve risk assessment and pricing accuracy.
Wow.
Essentially, he brought GEICO into the digital age.
Mm-hmm.
It wasn't just about the technology itself, though.
Okay.
What's really interesting is how Combs approached the implementation.
Yeah.
He understood that for telematics to be truly effective,
Right.
he needed buy-in from both employees and customers.
Mhm. Right.
So he focused on creating a culture of data-driven decision-making
Okay.
within GEICO and on clearly communicating the benefits of telematics
Mm-hmm.
to policyholders.
Right.
It was a strategic, well-executed plan.
Yeah.
not just a technology rollout.
That makes a lot of sense.
Yeah.
It wasn't just about slapping on some new tech.
Right.
It was about changing the whole mindset.
Absolutely.
And it clearly worked right. Didn't Buffett sing his praises in his annual shareholder letter?
He did.
Oh, wow.
Buffett said, and I quote, "Todd has worked tirelessly in getting the job done."
Wow.
Coming from Buffett, who's notoriously frugal with praise,
Right.
that's a pretty big deal.
Yeah.
It shows the level of trust and confidence he has in Combs.
Okay, so it's clear that Buffett is a master at picking great businesses.
Yeah.
But this GEICO story really highlights his genius for spotting
Right.
and empowering talented individuals, too.
Absolutely.
It makes you wonder, is that replicable?
Mm-hmm.
Can Berkshire Hathaway thrive without Buffett at the helm?
That's the million-dollar question, isn't it?
Yeah.
And it's something that a lot of investors are thinking about, especially with Buffett's successor,
Right.
Greg waiting in the wings.
Right. Abel is set to take over as CEO.
Yeah.
What do we know about him?
Well,
Does he have that same magic touch when it comes to picking winners and building teams?
Well, Abel's background is quite different from Buffett's.
Okay.
He comes from the energy sector, having led Berkshire Hathaway Energy for many years. But what's interesting is that he's demonstrated many of the same qualities that have defined Buffett's success.
Okay.
A long-term focus, a deep understanding of business fundamentals,
Right.
and a knack for identifying and nurturing talent.
So even though their expertise lies in different areas, they share a similar leadership philosophy.
Exactly. And that's what makes the Berkshire Hathaway model so fascinating.
Yeah.
It's not built solely on one person's genius,
Right.
but on a system
Okay.
that values long-term thinking, operational excellence,
Right.
and decentralized decision-making.
Okay.
They empower their leaders to run their businesses with a high degree of autonomy,
Right.
but within a framework of shared values and principles.
So it's almost like they've created a talent incubator within this massive conglomerate.
Yeah.
They're constantly identifying and developing future leaders who can carry the torch. Right.
Whether it's in insurance,
Yeah.
energy, or any other industry they invest in.
That's a great way to put it. And that's why this story about GEICO
Right.
and Combs' success is so significant. It offers a glimpse into the inner workings of Berkshire Hathaway and reveals a key ingredient in their long-term success, their ability to identify, empower, and retain exceptional leaders.
It's a lesson that any business, regardless of size or industry, can learn from.
Absolutely.
So let's shift gears for a second and think about what this means for our listeners.
Right.
What can we learn from Berkshire Hathaway's approach?
I think one of the biggest takeaways is the importance of building a strong leadership pipeline. It's not enough to just have a great leader at the top.
Right.
You need to have a system in place
Yeah.
to identify, develop, and promote talented individuals throughout the organization.
That's how you ensure long-term sustainability and growth.
So it's about cultivating a culture of leadership where everyone has the opportunity to step up and contribute.
Exactly. And it's also about recognizing
Yeah.
that different leaders bring different strengths to the table.
Okay.
Just like Buffett and Abel.
Right.
You don't need carbon copies. You need individuals who share your core values and vision,
Right.
but who also bring their own unique perspectives and experiences to the team.
So it's about finding people who complement each other,
Uh-huh.
who can challenge each other's thinking and push each other to be better.
Absolutely.
Yeah.
And that's what creates a truly dynamic and resilient organization.
Yeah.
One that can adapt and thrive in the face of change.
It's inspiring, right? To see how a company like Berkshire Hathaway, which has been around for decades,
All right.
can still be so innovative and forward-thinking. They're not afraid to embrace new technologies, to invest in new industries, to constantly evolve and adapt to the changing world around them.
And that adaptability stems from their deep understanding of their core principles.
Right.
They know what they stand for, what they value,
Yeah.
and what they're good at.
Right.
And that allows them to make bold moves without losing sight of their long-term goals.
It's like they found this perfect balance between stability and flexibility. They have a solid foundation built on enduring principles,
Right.
but they're also agile enough to adapt to new opportunities and challenges.
That's a great way to put it.
Yeah.
And I think that's a valuable lesson for anyone, whether you're Leading a company, a team, or just your own career, knowing your core values, embracing change, and being willing to adapt. Those are the keys to long-term success in any endeavor.
Okay, so we've talked about leadership, we've talked about adaptability, but there's another key ingredient to Berkshire Hathaway's success that we haven't touched on yet, their long-term perspective. These guys don't chase quick wins. They play the long game.
You're absolutely right. They're patient investors. They're focused on building lasting value. And they're not afraid to make decisions that may not pay off immediately, but that they believe will create long-term competitive advantages.
It's almost like they've mastered the art of delayed gratification, which, let's be honest, isn't something you see a lot in the business world these days.
It's true. So many companies are focused on quarterly earnings, short-term gains, and keeping Wall Street happy. But Berkshire Hathaway has always marched to the beat of their own drum. They're playing a different game, one where patience and discipline are rewarded.
And that long-term view is evident in everything they do, from their investments to their leadership development. They're not looking for quick fixes or flash-in-the-pan successes. They're building something that they believe will last for generations.
That's a fascinating contrast to the prevailing mindset in many industries today, where everything seems to be about speed, disruption, and instant gratification. Berkshire Hathaway reminds us that sometimes the slowest and steadiest approach is the one that ultimately wins the race.
So if we were to boil down Berkshire Hathaway's success to a few key principles, what would they be?
I'd say it comes down to 3 core pillars. Recognizing and empowering talent, embracing change and adaptability, and having an unwavering commitment to the long game. Those are the underlying values that drive everything they do.
It's a powerful formula.
It is.
And it's something that we can all learn from. Whether we're running a business, leading a team, or just trying to navigate our own careers, these principles transcend industries.
Absolutely.
And can be applied to any endeavor where you're trying to achieve long-term success.
Absolutely.
And I think the story of GEICO's turnaround under Todd Combs is a perfect example of how these principles play out in practice. It wasn't just about implementing new technology. It was about having the right leader in place, someone who understood the company's values, who could embrace change, and who was willing to play the long game.
Exactly.
So as we wrap up this deep dive, I'm left with this lingering thought. What if more companies adopted this approach? What if we shifted our focus away from short-term gains and started thinking more about building lasting value, investing in our people, and embracing change as a constant? What kind of impact could that have on the business world and on society as a whole?
That's a great question to ponder. And it's something that I encourage all of our listeners to think about. What would it look like to build a business or a career on the principles that have made Berkshire Hathaway so successful? It's a challenge, for sure, but it's also an incredibly exciting opportunity.
Well said. We've covered a lot of ground today.
We have.
And I hope this deep dive has given our listeners some valuable insights into the secrets behind Berkshire Hathaway's enduring success. It's a story about leadership, about adaptability, and about the power of taking the long view.
And it's a story that's still being written. So it'll be fascinating to see what the next chapter holds, especially as Greg Abel steps into the CEO role.
Thanks for joining us on this deep dive into the world of Warren Buffett and Berkshire Hathaway.
It's been a pleasure.
We'll see you next time for another fascinating exploration of a topic that's shaping our world.